Singapore's sovereign wealth fund GIC is remaining cautious amid a global economic downturn brought on by COVID-19. Its key metric of investment performance came in at 2.7%, lower than the 3.4% in the year before. Brendan Tanota with more.
High valuations, concerns over geopolitical tensions and an uncertain future have formed a challenging investment climate for GIC. Over the 20-year period ended 31st March 2020, the fund manager's annualized rate of return came in at 2.7% above global inflation, lower than the previous financial year. The reduction was largely due to booming returns from the late 90s tech bubble dropping out of the window, rather than the recent drawdown of global markets. As for its asset allocations, holdings in nominal bonds and cash rose, as these lower-risk assets benefited from the flight to safety. GIC also trimmed its exposure in developed and emerging market equities.
It's something that a lot of investors are thinking of or have been looking at. The stock markets in developed world started to come down. So, that would have been a good defensive move. What this means is that, in the future when prices are lower, it gives them opportunity to shift back into higher return assets.
Currently, investments in Asia excluding Japan make up 19% of GIC's portfolio, while Japan accounts for 13%. GIC Chief Lim Chow Kiat says he expects these numbers to rise over the long term, citing that a rising middle class could lead to profitable enterprises that expand and go global, and in turn present investment opportunities. But as one analyst explains, uncertainties remain in the current climate.
Because of the uncertainty associated with the pandemic, it is difficult to predict how the public health, political, and economic responses of countries around the world would impact or would affect their prospects or their potential going forward. There is a lot of uncertainty because even the best plans at this point may not work out, as we have seen in many places around the world. Therefore, even if a country or a particular region looks good at the moment for investment, it may not be the case going forward.
GIC notes that the capabilities to deal with the pandemic also differ across Asia, which could imply a less synchronous recovery. But the fund manager says Asian governments and businesses have shown to be resourceful in adapting and adjusting their growth models, as seen in the face of large uncertainties in the past.